Leading the EV revolution despite increasing competition. Tesla. When it comes to EV production, Tesla is at the top and has remained there for a long time. But a few up-and-coming EV businesses are expanding quickly, and they might prove to be formidable rivals of Tesla in the future. Welcome back to Everything Tesla Stock, everyone. Recently, German automaker Mercedes-Benz and American electric vehicle manufacturer Rivian established a collaborative venture to produce large battery electric vans for both businesses in Europe. These automakers claim that the alliance intends to introduce two electric vans, one built on the new electric van architecture from Mercedes and the other on the second-generation light van platform that Rivian is set to release soon. Wedbush analyst Dan Ives responded to this by offering some observations on how this collaboration would affect Tesla. He said that Tesla's stock price might be impacted by this alliance between Mercedes-Benz, Rivian, and Tesla electric vans. This video will contain details, but before we do, please remember to subscribe, like, and turn on the notification bell if you enjoy this kind of content so you can stay updated on all things Tesla. Dan Ives works for Wedbush Securities as a managing director and senior equity analyst. Additionally, he is a fervent supporter of Tesla and is always voicing his views on why he believes the company will continue to grow in the years to come. Ives believes that Tesla's profitability is a game changer for the company and that demand for its vehicles will probably rise in the coming years. Rivian, a recent entrant to the market, has revealed a significant alliance with one of the largest automakers worldwide, which may have an impact on Tesla's stock price. What does Tesla's stock and this relationship signify? To find out, keep watching. First, it can indicate a minor decline in Tesla's market share. Given that these two well-known automakers are collaborating on this project, we might anticipate something noteworthy that will rival Tesla's offerings in the EV market. The majority of companies claim that the goal of this agreement is to use an existing Mercedes-Benz site in Central Eastern Europe to develop a brand new production plant exclusively for electric vans. In these places, the two businesses will work together to own and operate a Mercedes-Benz factory. The memorandum of agreement states that vans from both companies will be produced in this factory. Manufacturing is scheduled to begin in a few years. According to Dan Ives, this is a significant advancement for the European strategy with important alliances like Mercedes. Furthermore, he mentioned that Rivian has a special window of opportunity to target the commercial market in Europe in 2023 and beyond. The Sprinter, Evito Tour, EQV, and Evito panel van are the four battery electric van models that the automaker currently manufactures and distributes. It sold 334,000 automobiles in 2021, almost 9,000 of which were electric. In a recent statement, CEO of Mercedes-Benz Vans, Matthias Geisen, stated that the firm is collaborating with Rivian on investments and technologies since both have the same strategic goal in mind, to accelerate the electrification of the van industry while providing customers with high-quality, sustainable products. Mercedes-Benz and Rivian have both committed to work together on cost-cutting initiatives, even though the two companies have not yet disclosed whether their joint venture will be equally owned. The two automakers also make electric cars for passengers in addition to electric vans, which are primarily used for business. Given that Tesla produces EVs as well, there's a good likelihood that its market share will decline when Mercedes-Benz and Rivian's new electric cars are released. These businesses could not be as astute in EV manufacturing as Tesla, but there's no reason they can't extend their partnership into this now Tesla-dominated market. In the second quarter, Rivian produced 4,401 automobiles, up 72% from the previous quarter. The business disclosed that it is on track to meet its 2022 production target of 25,000 electric vehicles, which represents half of its initial estimate of 50,000 vehicles. The corporation is trying to increase output, but it is still having trouble keeping up with demand. The automobile manufacturer's production ramp-up has been uneven, and issues with the industry's supply chain have impacted it, especially because it hasn't yet developed solid relationships with suppliers. Due in major part to supply chain problems, Rivian reduced its initial objective of shipping 50,000 vehicles this year to 25,000 vehicles. As of June 30th, just about 9,000 automobiles have been produced. The facility now has an annual production capacity of 150,000 automobiles, but it expects the growth of its Illinois plant to expand capacity to 200,000 vehicles next year. However, Tesla is well ahead in terms of delivery and car production. Tesla's annual sales increased dramatically from 22,477 vehicles in 2013 to 936,172 vehicles in 2021. The carmaker can produce more than 1.9 million cars a year at its facilities in China, Germany, Texas, and California. Additionally, Tesla's revenue in 2017 was $11.8 billion, and by 2021 it had grown to $53.8 billion at a 46% compound annual growth rate. There's no set date yet, but Rivian plans to establish a second factory in Georgia in 2024 and hopes to increase its manufacturing capacity to 600,000 vehicles after that. As a result, by the end of the decade, Rivian will probably be far smaller than Tesla. Rivian might have trouble growing as quickly as Tesla for two key reasons. First off, there's a lot more competition in the EV market today than there was before Tesla's meant to work arise. Rivian is still up against smaller electric delivery vehicle makers like Canoo, which just got a big order from Walmart, and larger electric vehicle manufacturers like Stellantis, previously known as Fiat Chrysler. Many of Tesla's early losses have been mitigated by significant government assistance, alluring financing conditions, tax breaks, and the company's future Model X, Cybertruck, and additional robovans. For the foreseeable future, Rivian and other smaller EV manufacturers will struggle to maintain the same advantages. Based on analyst predictions, Rivian may run out of money before achieving a meaningful increase in production because it is expected to continue losing billions of dollars annually. Similarly, Dan Ives said that Rivian's production narrative will be highlighted in the upcoming quarters, but he also mentioned that the company continues to face supply-side challenges that make it harder for it to achieve its objectives. Even with an outperform rating and a $40 price target increase for Rivian shares, Ives continues to believe that Tesla shares will eventually reach $400. The automotive sector faces two primary difficulties that it must address, at least in the short term. One is the pandemic's effect on the supply chain, which has forced automakers to temporarily close plants and services owing to lockdowns and other restrictions. The Russian invasion of Ukraine in February 2022 is another reason pushing up the cost of raw materials. Since these countries are significant suppliers of these vital metals, the price of nickel, cobalt, and other raw materials for EVs has soared, which has raised the cost of manufacturing automobiles. In just 2 years, the average cost of raw materials for a single EV has increased by around 144% to $8,255 as of late May, according to financial advising and consulting firm AlixPartners. As of March 2020, these costs came to $3,381 in total. According to the consultancy firm, throughout the past 2 years, the average cost of developing an electric vehicle has increased by almost $2,000 on average. The efforts of automakers to enter the EV market have been seriously impeded by these issues. Nevertheless, Tesla has effectively overcome every obstacle while growing its car production and delivery in spite of these market conditions. Rivian will need to put in years of steadfast work to achieve this. Meanwhile, other analysts, like as Garrett Nelson of CFRA Research, are cautiously enthusiastic about the long-term ramifications of Rivian's contract with Mercedes-Benz, despite the fact that Tesla is well ahead of this automaker. Although the company's near-term prospects and cash burn rates are of great concern to investors, especially in light of the fact that a few upstart EV companies have recently declared bankruptcy or issued warnings of liquidity issues, he said that Rivian's MOU with Mercedes is positive. Additionally, some experts project that if Rivian sticks to its current production goals and increases output over the following 4 years, its revenue will skyrocket from $55 million in 2021 to $12.4 billion in 2024. Rivian is doing significantly better than many of its rival electric vehicle makers, such as NIO and Faraday Future Intelligent Electric, both of which have not yet manufactured a single vehicle, even though it is still far less than Tesla. However, Rivian hasn't proven to be the next Tesla. It will take a few years to arrive to that stage. There are still a number of forthcoming initiatives by Tesla that have not yet reached the market, and the company is currently trading at 10 times this year's sales. The prospect of Rivian becoming even remotely like Tesla is, at most, a utopian situation in which Rivian achieves nothing but prosperity. How do you feel with Dan Ives' assessment of the Mercedes-Benz and Rivian partnership? Will it have an impact on Tesla stock? Tell us in the comments below. Check out this video on your screen to see what Tesla has been up to these past several days. I'll see you over there. Music.